Hello friends, this is Shashi Agarwal, Economics and Law Classes. I welcome you all. Today our topic is investment function, which is very important for the subject principles of economics, business economics and macroeconomics. If you find my video useful, please do like it, share it and also subscribe my channel Shashi Agarwal Economics and Law Classes. This is my app, Addism app, which you could download from the Google Play Store. It provides free study material and free mock tests to the students of commerce, economics, and management. It also provides structured courses, principles of economics, macroeconomics, and business economics. They are also available as structured courses. So, what is the meaning of investment? In layman's language, we always interpret investment means purchasing of different kinds of share, stocks, and investing capital. But in economics, Keynes has conveyed a special meaning to the investment. According to Keynes, there are two types of investment. One is financial investment, and the other is real investment. When we talk about the financial investment, it means when the investor buys shares and stock of an existing company, and he may buy old company. When we talk about the financial investment, it is just only transfer of ownership. There's no change in the productive capacity and there's no addition made to the existing stock. So real investment refer to that investment which is made in order to set up a new factory or to open a new enterprise. And whenever we talk about the real investment, it adds productive capacity and also made some addition to the existing stock. So the real investment means when the additions they are made to the existing capital asset, which result in increase in productive capacity as well as in the employment. And when we talk about the investment in economics, that refer to the purchase of such goods which enhances the overall production capacity in the domestic economy. When we talk about the real investment, it is the expenditure on the fixed asset. It means addition to economy's existing stock of assets. So real investment means net capital formation. When we talk about the real investment, it means fixed investment in the fixed assets, investment on business inventory, investment on residential housing. So broad component of investment expenditure, business fixed investment, investment in business inventory, investment expenditure on residential construction. Business fixed investment or fixed capital formation. Investment means addition to the stock of capital. Fixed business investment refer to the expenditure on fixed asset which are repeatedly used in the process of production over several years. Like we are having machinery in our business and we use machinery for the purpose of production. So it is the fixed asset which is repeatedly used in the process of production. Fixed business investment is depends upon the size of business profit. There will be more fixed investment if we have more profit. The other two determinants are real rate of interest and business expectation. The real rate of interest is equal to the nominal money rate of interest which is prevalent in the economy minus expected rate of inflation. Business expenditure on fixed assets is inversely related to the rate of interest. If there is a high rate of interest, then we will have less expenditure on fixed assets. If the rate of interest is less, then we will have more expenditure on fixed assets. Business expectation refer to entrepreneurs' forecast of the future state of the market. So business expectation, what we expect in the future. If we expect more business, more demand, more profit, definitely then we will have more fixed investment or more fixed investment in fixed asset. Business expectation refer to entrepreneurs' forecast of the future state of the market. If they expect more demand, it is going to be high in near future, definitely there will be motivation to invest more. Investment in business inventory. Business inventory refer to the desired accumulation of the stock. Includes changes in the stock of finished and unfinished goods, changes in the stock of raw material. It is significant because it is most volatile component of the business investment. It depends upon the level of the demand. If the level of demand, then we'll have more accumulation. Inventory tend to vary as the inventory accumulating depend upon the market expectation. Expenditure on inventory accumulation is also related to the real rate of interest. The higher real rate of interest is high, then we will have less inventory. But if the real rate of interest is low, then we will have more inventory. Investment on residential housing largely influenced by the real rate of interest. Here, when we are talking about the investment on residential housing, it is the investment on new residential housing. If we are purchasing the old house, that is just the change of ownership. Interest rate on housing loan were significantly slashed, so there is a more demand because the more loan is available at the low rate of interest. Even the government provides income tax deduction. The person who borrows loan for the purpose of constructing the house. Now we will understand what are the various types of investments. So investments could be classified in the following manner: financial and real investment, induced investment and autonomous investment, private and public investment, gross investment and net investment, intended or extended or planned or exposed investment. Now we will understand one by one. So when we talk about a financial investment, it means the investor is spending on stocks and share of the existing company. If we see it from the part of the individual angle, then it is beneficial to the individual because it increases the asset of the individual. But when we see it from the economy point of view, it is not significant because in the domestic territory, if we are purchasing the shares and stocks and debentures of some company, it means only the change in the ownership. But if it is undertaken by our resident from the rest of the world, then it is significant. Then there is an addition to the asset. So real investment refer to expenditure on the purchase of such goods which will enhance overall production capacity in the domestic territory. It will be addition to the economies of the existing stock of capital. And when we talk about the real investment, it means net capital formation. Stonier and Hague has defined by investment, we do not mean the purchase of existing paper securities, bonds, debentures, or equity. But the investment is linked with the purchasing of new factories, new machines, and building of new houses, etc. So, what is private investment and public investment? Private investment refer to that investment which is made by the private individual, where the purpose is to earn the profit. Because private investment is made when the investor thinks there is high chances of earning profit and income. So it depends when the private investment is made. It is governed by two things, that is the marginal efficiency of capital, that is the expected profitability, that depends on the prospective yield and the supply price and the rate of interest. While making investment, he compared the marginal efficiency of capital, that is the expected return, that is the expected profitability, with the rate of interest, that is the cost of obtaining funds. If the MAC is more than the rate of interest, then he will make investment. If the MAC is less than the rate of interest, he will not make investment. Public investment, which is made by the government, as the name suggests, which is made by central, provincial, and local self-government of a country. The objective behind such investment is the welfare of the people, defense of the country, economic development. So, public investment is not won by the profit motive. The purpose is to enhance the economic welfare, enhance the security of the state. Induced investment and autonomous investment. Induced investment, which is governed by income and profit. Here, the entrepreneur is motivated to make more investment if there is a more income, more profit. It increase with the increase in income, decrease with the decrease in income. It is income elastic. When an increase in investment is due to increase in current level of income and production, then it is known as a induced investment. So it has a positive slope. As we see, this is the induced investment curve. On the y-axis, we take the investment. Here we take the real national income. So this is negative. On the low level of low level of income, it could be negative, but it has a positive slope as the income goes on increasing. So the investment also goes on increasing. Autonomous investment, which is independent of the level of profit, income, or output. It is not induced by income. It is not made on the basis of change in income. It refers to that investment which is made with introducing new techniques, new invention, enhancing the level of effective demand in economy, the economies which suffer from the depression and unemployment. And the economies suffer from the depression and unemployment, the government makes investment for the purpose of bringing some development in the economy so that the people could get the employment and there should be a movement in the economy. So autonomous investment is not made with the objective to earn the profit. It is independent of the level of income and profit. Autonomous investment is generally associated with such factors as the introduction of new technique or products, development of new resources, growth of population and labor force, made for the economic development and defense sector of the economy. So shape of autonomous investment is parallel to x-axis. So here income is zero, still this investment is made. Gross investment and net investment. Gross investment, the total expenditure incurred on capital goods at any given time in economy is called gross investment. It has two components, net investment plus the replacement investment. Replacement investment means when the existing asset, their efficiency level decreases due to wear and tear of the fixed asset. So existing stock of capital goods goes on diminishing. So gross investment is equal to net investment and the replacement investment. Whatever investment is made in order to maintain at existing level is called replacement investment. If we have a machinery worth rupees 10 lakh, but that machinery, we have to replace it with new machinery, then it is called replacement investment. When there is an increase in capital stock, when the gross investment is more than the replacement investment, so net investment means there is an increase in capital stock. If we are having machinery worth rupees 10 lakh, so when it increases to 15 lakhs, so there is an increase in capital stock. So net investment is equal to gross investment minus replacement investment. Intended or ex ante or planned or voluntary investment, or unintended or ex post or unplanned investment. Uh, Ex ante means the investment which is done according to plan. The amount of investment which firm plan to invest at different levels of the income in the economy. When the entrepreneur makes investment according to some definite plan in order to achieve a given level of objective, it is made voluntarily. So, what are the causes of planned investment? Anticipation of increasing demand and make ex ante investment to meet the demand and make profits. So, here the investment is also made for reduction of the cost of production. When the government of the economy wanted to have a set target of wanted to give a set target of employment or set target of economic growth, so the investment is made by the government. It is called voluntary employment, which is made at the will of the government. Ex post investment, which is the involuntarily, unplanned, unintended investment. It is the actual investment in the economy. The investment which is made involuntarily. Many times on account of fall in demand, stock of goods accumulate with the entrepreneur. The stock accumulates against the entrepreneur's will. Actual investment which is made by the entrepreneur is called the ex post investment. So there is a difference between the planned investment, ex ante investment, or ex post investment. Planned investment is the investment which is desired to be made by the firm and planner in the economy during a some specified period. It is the amount of planned investment given by the investment demand function. Ex post investment, which is the actual investment. So actual investment is equal to the planned investment plus unplanned investment.